the week ahead. I want to start by reviewing a previous day in the market. So many times what has happened before is important to understand what can happen going forward. If you look at the break in front of you right now, you will see that the market spent a little bit of time on the upper end, and then we had tremendous number of single prints taking the market down. We've often talked about this lack of building or coming into balance as a market rallies. This time, we're talking about the market not showing any building blocks as it goes down. When that happens, it greatly increases the odds that the market can trade back up through that range, which you can see it did following that break. Usually when you have a structure like this, it is an indication of very emotional selling, and emotional selling, like emotional decisions, are usually not the best. Okay, let's leave that thought there. And now let's go to the daily bar. When I look at the daily bar, you will see that the market broke down to the 100-day moving average, a very mechanical level. It rallied from that 100-day moving average, and then again, it found support at the 50-day moving average and moved on higher. Right now, we have one time framed higher since the low. So we've 1, 2, 3, 4 days of one time framing higher. Historically, the trading that takes place on a holiday week, particularly the last couple of days when the larger traders are not present in the market, they're on vacation or the second team is leading the charge, the market retraces that range. Now, there's nothing that promises you the market's going to retrace the last couple of days, but it's certainly something you should prepare yourself for as we come into the new week. It looks to me like the news is fairly light throughout the week until we get to Friday. And Friday looks like a heavy news day with a lot of inflationary or PCE information on that day. So as I leave this very shortened meeting, I would think that there are good odds that the market will retrace part of last week. If it retraces part of last week, then you want to see if it builds a base and then moves back higher, because it's not uncommon for it to retrace the weakness or the weak structure from the previous week and then rally. Doesn't have to, but you, of course, the support right now, if the market does set back, is the 50-day moving average followed by the 100-day moving average. Don't miss out on our Cyber Monday deals on our website. Our signature e-courses are being offered at the best discounts we have ever offered from now through Monday night, with the legacy program also being off 50%. Links are below in the description. Have a great week. Thanks.